What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. Today I'm joined with Heidi McNulty. How you doing today, Heidi?
I'm good. How are you?
I'm fantastic. You got one of those names it's easy for a guy with a red beard to figure out how to pronounce, so that's wonderful. But I've got extra special great news for you, Heidi. Today we are joined by my very favorite audience member. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate syndicators, investors, buyers, sellers, all that kind of stuff. And you might ask yourself, why on earth would I do such a silly thing? Well, if you've ever heard of an off-market deal, sometimes they're called private, sometimes they're called 506B syndications, you might find out that the SEC requires that you have documentation of your prior substantive relationship, or else the SEC will get ants in its pants, and we don't want that. So I have people on here, and I find out what exactly is it that you're looking to contribute, what are you looking for precisely, and the exciting thing for you is that you learn how to effectively communicate on the subject of commercial real estate deals, because I think if you're going to be involved in this industry, your career is going to hinge on that. But before we get too far into business, Heidi, do you want to say a thing or two about yourself?
Yeah, so I have done a lot of real estate. I've been in real estate for about 12 years, both investing and doing fix and flips. I also own a commercial building that one of my old companies rents out. And I've just really enjoyed real estate and feel like it's a great avenue to wealth. I also have a book coming out on March 14th called Buying Time. And it's kind of my journey to wealth through real estate, as well as some personal development and mindset tricks.
Awesome. I love it. And that brings me to the first segment. Before I do that, though, I always got to say, but wait, check your eight. Heidi, you seem, pretty up to date with technology or whatever, but can you see through the camera and down into the user's device down there? There might be this hideous subscribe button if they didn't hit it already. And maybe, okay, it's a silly joke, but whatever. The five distinct motivations. That is, I found that as I speak to all these different syndicators, investors, and whatnot, and everybody has their own unique why, but they do fit pretty cleanly into these five different motivations. And as a syndicator, you have to understand what those motivations are, because you really, before you partner up with anybody, you need to figure out, it's like, what's going to keep you from leaving? What's going to keep you from just saying, you know what, I'm not interested in doing what I was supposed to. I'm just going to bail. And here they are. The first motivation I found is preservation of purchasing power. What on earth is that? Well, some people already have a portfolio of assets instead of a W-2 job. And the way that they make ends meet is from the proceeds of ownership. And if you already don't have a job and you're just using what you own to pay your bills, why would you bother making a new acquisition? After all, it takes months and there's all sorts of risks involved. Well, there's a couple answers. One of them is if inflation rears its ugly head, it's going to eat away at the purchasing power of your cash flow, so it'll be time to purchase another asset. But other than that, it would have to be at a steep discount, probably due to distress or an asset crash or something along those lines. And that's not where I'm at. More similar to what I'm up to is trading time directly for wealth. And to unwrap that a little bit, my background is my CRM agency that I've had since 2011 called funnelfixing.com. But the thing I noticed once I got into real estate, my boss was making way more money than I was, and he was doing 10 single family transactions every single month, but his tax burden was itty bitty teeny tiny. And when you make a salary, you're getting taxed more than anybody else. So it hit me I need to figure out how to pivot where I'm getting rewarded for my effort in the form of deployed capital, aka equity. So that's what I'm up to. That's a
And I'm going
little.
to interrupt you real quick. So that's a lot about what my book is about.
Uh-huh.
Trading time for wealth and building wealth and financial freedom so that you're not just stuck in a 9 to 5 rat race all your life.
I love it. I love it. Yeah, exactly. That's so I'm glad we're on the same page for that, but that's too abstract for some people, too subtle, especially youngsters. They tend to jump the gun a little bit and they want to say they want to hustle really hard right now and fast track their retirement. But really, what this motivation comes down to is taking control of your schedule. Basically, they want to work fewer months per year or fewer weeks per month at some point, and that's a perfect motivation. But it's definitely not everybody. Some people are just plain ambitious. They want to buy their entire hometown. They're after that generational wealth. They want to make sure that their great grandchildren never have to hold a day job, and they're going to be hustling into their 90s to make that happen. And there's another group that also is similarly motivated, but it's not so much their own legacy. More, they've found a sector of society, or maybe it's animals, maybe it's the environment. But at the end of the day, they found out that there's a financial component to making a big impact. And so that is why they're making these commercial real estate acquisitions. So, Heidi, of those five different motivations, you mentioned the time for wealth part, but are there any others that you think really, really motivate you?
Yeah, three stick out to me. The generational wealth, I definitely worked very hard so that I could set my kids up. I don't want my kids to never have to have a job because I think that gives you a lot of purpose in life. But I want them to be able to pick a job based on their passion and not worry about the finances and just be passionate and fulfilled in life. The other one was early retirement. I retired at 35. And I think that we're not meant to work till we're 65 and can't walk and then try and travel when you can't walk or you can't really enjoy traveling. And so, really building that wealth quickly so that you can live a fulfilled life.
I love that answer. It's fantastic. And that's why a lot of different coaches and gurus focus on that sort of thing. But it's business, it's the real estate business, it's a very mature business, and there are risks involved in any type of business. But one thing that jumped out to me as I got more involved into these 506B syndications, these off market deals, was if there's a securities attorney in the deal, which there really should be, they should have forced everybody who invested to fill out this questionnaire with all these different financial questions that are really, really invasive and uncomfortable to answer. But there was one question in particular that I zeroed in on because I didn't think it gave me real actionable information. And it was the tolerance for risk question. So I've turned that into a fill in the blanks question, and here it is. There are many popular investment asset classes, but I think blank is too risky. Heidi, it could be inside real estate, it could be outside real estate, it could be both if you want. What's too risky for you?
I think my personal opinion on that is probably day trading.
Mm-hmm.
A lot of people do day trading in the stock market, and I feel like while there's a lot of calculation to it, it's still pretty risky.
I love that. I love that, especially because I've spoken to some Wall Street attorneys, and when they tell you about how these the best and brightest still get wiped out as well, it goes to show that it's really what do you want to call it? It's a bull that you can't really ride. But I have a new question for you, and it's a little bit difficult for me to explain already. Still, I know I didn't do a great job before we started the recording, but every syndicator will have one or more different metrics that they really zero in on. And so just to make sure that we're speaking the same language, or you are speaking the same language when you meet Heidi, I like to ask, which of these metrics do you depend on most? And I'll read them out. First one is cash on cash. Second one is IRR. Third is cost per door. Next is NOI, going in cap rate, loan interest, average income. That means for the area, amortization period on the loan, market versus in-place rent, population growth, sponsor record, as in like how many deals have gone full cycle, or the waterfall slash split. Do you want to say a couple of those from the list that you find really motivate you to say yes on a deal?
Yeah, so I think for my multifamily part of my portfolio, I really paid attention to market versus in-place rents.
Mhm.
And then any distressing on the property that I could increase or renovate and then increase rents as well.
Mhm.
Another one that I pay a lot of attention to is net operating income. I think, every investor has a different thing that they're looking for, but I'm looking for cash flow today, and what that looks like today, not only, in retirement or 10 years from now.
I love it. I love it. I'm just eating that up like a subscribe sandwich, which is always my very subtle reminder for me to bring out my Dan Does Deals Commercial Core Competency Cube, and you can get your own copy for free at dandoesdeals.com. Like a complete dummy, I didn't even ask for your contact information on dandoesdeals.com, and you can just download it without even that's the cardinal sin of marketing. You never give away your freebie without asking for some sort of contact information. But the main thing is, I realize that your future in commercial real estate depends on your ability to communicate on the subject of commercial real estate deals and do it effectively. So that's why in every episode I go through all 6 sides, and this way you'll also be able to understand better how my guest Heidi fits into these deals. So let's get started. The first one is the repositioner, who's an acquisitions person. So they're doing a bunch of paperwork. They're looking at a bunch of properties. And what is that paperwork, you may ask? But if you did, you'd find out they're underwriting the deal. That means they're doing the math. They're doing the arithmetic. They're doing the arithmetic to find some upside, but also they need to check, first of all, if the seller slash broker is even being honest about how much the property makes right now. Okay. So the repositioner has to understand all of that to figure out if it's a good deal or not. And they figure out how to reposition the property. In other words, run things a different way where you make more money. And the most unintuitive part of being a repositioner is having financier relations. What's that? Well, a financier is a person who's not on the GP team. They only deal with paper and money. In other words, paper and money and people is really what I'm getting at. But these are the different lenders. And the reason why the repossessioners have to have a vast network of financiers is because if they can just simply secure a more advantageous loan, that goes straight to the bottom line of the business, and therefore they found their upside. But the more traditional place, the more intuitive spot where a repositioner can find some of that upside is through more efficient operations. You stop those Benjamins from going down the toilet. But of course, there's more to operations than just unclogging toilets and collecting rents and mowing lawns. A lot of properties, especially if they're 100 units or more, you're probably outsourcing to a property management company anyway. So what are these meaningful operations that a GP might do? Me personally, with my CRM background, my automation, that's kind of handy for automating a bunch of things and also creating any kind of web assets. But the other big one is understanding that vacancy is the enemy in these businesses. So if you do outsource to a property manager, you need to have somebody on the GP team with some serious marketing chops, because you need to get those units filled. And so that's another thing that I provide to GP teams when I'm on them. But honestly, there's only so far you can go with operations for cutting costs and being more efficient. So the next place that the repositioner is going to look is to get a contractor involved, a contractor team to do a value add. In other words, upgrading those units. The idea being that the next resident would be happy to pay more in rent than the previous one because the place is nicer. But of course, it's not that simple. You can spend endless amount of money on contractors. You can get them to gold plate the toilets, but you're not going to get a return on investment. And if you have the same problem that I do, see, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because I'd still be stuck at an airport in an hour or two. So it's not going to be me. So once the local is in place to keep an eye on the operations, keep an eye on any contractor work, and the repositioner has a property that they really, really like, it might go like this. They'll say, hey, financiers, I got this 350 unit apartment complex. It's tens of millions of dollars. You don't happen to have, I don't know, tens of millions of dollars you want to lend us, do you? Well, if you tried what this repositioner just did, let's say you're just getting started. Let's say you're a physician. Let's say you're an engineer or an attorney. You and your friends say, hey, if we just, put together 100K each or something like that, we could take over that great big building that's down the street. Well, the flaw in this plan, and I can tell you gurus and mentors, they tend to really gloss over this one. So look out for it. The bank is going to say, well, who's the sponsor? Who's the KP? In order to be eligible for a commercial loan, somebody has to own a similar asset. So that means if you want to take over a 350 unit apartment complex, you need somebody who already owns a 350 unit apartment complex. On top of that, you need a certain amount of liquidity. And then amongst the entire GP team, you need a balance sheet of at least the amount of the loan. But if you can pull all that off, you got yourself a commercial real estate deal. So Heidi, as far as these different roles in a deal, where do you anticipate taking part in your next deal?
I am more of the operations and fine-tuning operations. I also have my own contracting crew, and so that helps a lot on renovating projects. So those are the two pieces that I definitely bring.
All right. I love it. I love it. And that brings me to the next question, which is the buy box. And when real estate people are saying, hey, what you looking for? What's your buy box? What's your ideal property? We're really asking about three main things up front. The first one's geography. Where is it? Which state? Which county? Possibly even which neighborhood? It's absolutely going to matter. So the geography is the first one. The second one is size. And most of my guests on this show are in multifamily, which is apartment complex investing. And in apartment complexes, you go by unit count to indicate the size. And it's important because the type of group that's going to take over 10 unit apartment complexes are going to be completely different from the ones that are taking over 350 or 150 unit apartment complexes. So that size matters. And of course, there's other types of commercial real estate that go off of square footage or whatnot, but that size is still going to matter for that reason. Now, the third one I'm going to call desirability, but the more common term is class. And I don't like the word class because it's really talking about two completely different things. Those are condition and area. And when you're talking about condition, we're talking about how old is the building? How beat up is the building? Is it full of luxuries and amenities, or is it really, really, ho-hum and bare bones sort of thing? So that's the desirability. But when you're talking about the area, you're talking about what are the school districts like where the property is located? What about the crime rate? And then, of course, the famous saying of real estate is about location, location, location. What they really mean is traffic, traffic, traffic. How many people go by that property on any given day is going to contribute to the desirability as a whole. But regardless of if you're talking about the area or the condition, we use the same system as in grade school, where you got A plus at the top, and then A minus, and then B plus, and so on. So Heidi, as far as your buy box, what's easier to say yes to?
So I definitely focus on Salt Lake County in Utah.
Okay. And then as far as size and
the largest that I have currently is 35 units, but I ideally am working my way up and would love to get 1031 up into larger properties.
Well, I love it. And then as far as class goes, it sounded like you wanted more stabilized properties, but what sort of class are you thinking?
I'm pretty open on class. Again, I have my own construction crew that does my flips, and so I do have the ability to increase value, on properties that are a little lower. But I also have bought properties that I didn't have to do anything to, and that's always nice as well.
I love it. I love it. So then let's talk about people. And my favorite thing by far about commercial real estate, it's how friendly the community is. And I chalk that up to the fact that nobody is going to be all six sides of this die for any meaningful amount of time. They're going to have some specialization and they're going to focus on that. So we're all eager to put these teams together, but at the same time, we have our own unique backgrounds and skill sets. So we'll find we're better suited to help some people more than others. Me personally, because of the CRM, web asset, and IT marketing, content creation, and all these other hats that I wear. The sponsors and KPs are the people I generally am most eager to speak to because they've got a foundation already in their business where a person like me can make a disproportionately large difference. Of course, the other things too is because I'm from the internet, always eager to speak to those locals, whether they're repositioners or not. But Heidi, as if you have any 506B deals, I know you mentioned you're not big on the syndication scene, but you're not allowed to mention them specifically. But who might be out there in the audience that you think you're best suited to help?
I would be interested in helping anyone that, has the financing piece or has the connection locally, and then I can fill in the blanks.
Yep, that makes sense. That makes sense. Good stuff. And then as far as how to reach out, I'm pretty easy to find because I got this really distinct last name, which you can see right there, especially on LinkedIn. That's the platform where I spend most of my social media time. But if you have your phone handy and you scan this QR code right there, that brings you to the FAQs page of 506BME, which is the platform where I help take over your IT and the documentation of all your substantive relations for your investment syndications. So that's the important service that we offer at 506BME. But Heidi, if people want to reach out to you and your organization, what are the best ways to reach out?
On Facebook and Instagram, I'm Heidi McNulty. And then on LinkedIn, I'm on there as well. And I don't know my hashtag, but I'm Heidi McNulty on there as well.
Okay, sweet. Yeah, and you can shoot it to me and I can put it in the description down there. And on that subject, that brings me to the PSA that I always do, which is if you've been watching this episode and you've been experiencing searing pains in your eyeballs, and maybe like migraine-like symptoms, I'm confident it's because there's this hideous button down there. It says subscribe, and you can get rid of it just by clicking on it. It doesn't cost you anything. You don't have to put a credit card, any of that ridiculousness. And full disclosure, I want you to hit it because if enough people do, then YouTube will start to pay for these videos instead of me. And I think that would be amazing. And the trade-off to you is my videos may show up on your list of suggestions, but as far as I'm concerned, you can just ignore those suggestions. I just appreciate the fact you spent this time with me. Just like Heidi, I appreciate you joining me today. This has been great.
Yeah, thanks for having me.
Awesome. Thanks. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506BME or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, and all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506 B me, everybody.